Hello everyone, welcome back to the channel Basu and Intraday Guide. So as you know, in this channel generally I talk about intraday trading, how to do and all. So in this video I'll be taking you through the golden rules of trading. So that means the basic, very basic rules what you have to follow when you are doing trading. Okay, so these are not like a kind of very big things, but smaller things. What is needed for your day-to-day trading activities. So let's quickly go through one by one. The first one, exposure. So you might be kind of astonished by seeing this exposure in the first place, but still I feel that this is a very basic thing due to which many people are leaving the market by getting the losses and blaming the market that it's a gamble, which is like a very true. The only reason behind the exposure, due to the brokerage. Due to a high brokerage or like due to the greed of the brokerage nowadays, all the brokerage houses are giving you too much exposure, or it is also called as leverage on your investment. So for the intraday trading it's almost like a 20 times is kind of minimum for every brokerage house. So generally what the newbies will do is that whatever the money they will be having in their account, they will take the trades with exposure, whether it is like 20 times or 25 times, and even I've seen like brokerage houses giving 30 times also. So in this case what they will do is that they will take the trade and take the full leverage. So even like just for example, let's consider 20 times leverage or 20 times exposure on a particular trade. So when we say 20 times, so what that means is, suppose if you are having 10,000 in your account, you can buy a share of worth rupees 2 lakhs. Okay, so what happens is, when you have bought 2 lakhs of shares, and if the share goes 1% against you, then you will be losing 20% of your initial investment. So with this, so if the share goes 5% against you, then all your investment will be wiped out. So your account will be becoming zero. Okay. So however, exactly it doesn't become zero, because you'll be having a stop loss somewhere, or if it doesn't, the broker will cut the position after a certain point of loss. Okay. But still, uh, as per my experience, you should not use this exposure at all. But in few cases you can use the exposure not more than 5 or 6 times. So if you're having 10,000, yeah, you can buy a shares worth rupees 50,000 or 60,000 at the max. You should not go beyond that. So when we talk about exposure, there are two things. One is intraday and swing trading. So generally in the delivery, uh, people won't give the exposure, especially today's discount brokers won't give that exposure for swing trading or delivery trading. But there are few brokers who will give you exposure on swing trading. Swing meaning like 2 days, 3 days, 4 days, you can just carry forward that. But when you are doing swing trading, generally the exposure will be less. So this is preferred rather than taking 20 times in intraday. So if you say if you are taking exposure in swing trading for 5 or 6 times, then the risk will be very small comparatively. Even the share goes against you, you will be losing a very small part, not like a very big one, as in where you will be taking 20 times or 30 times exposure. Okay, so the learning from this is, let's not take the full exposure of what the brokerage house is giving me. So instead we will just taking like a maximum 5 or 6 times of leverage, whatever they are giving. Okay, so for this, swing trading is the best thing. So wherein generally, even if you are not trading with a stop loss also, there are very rare chances that you will be pushed out of the market by going by when the share goes against you. There are very minimal chances of that. So uh, swing trading is the best for this one. So let's go with the next one, stop loss and trailing stop loss. Very important one. So generally you are knowing what is stop loss and trailing stop loss. So stop loss, the basic rule of trading says you have to use stop loss, and I think many people are using that. But one more very important thing I just want to let you guys know is the trailing stop loss. So which many people are not using this, and believe me, this is so much useful that uh, it can all the time it will make your losses lesser and profits more. So probably for the people who don't know what trailing stop loss is, so suppose if you bought the share at 100 rupees and the share went to 102, then initially there will your stop loss will be like somewhere around 98. And generally like when the share goes in your direction, the stop loss whatever you had given will be lifted up towards the value of the share, meaning when the share goes from 100 to 101, your stop loss from 98 will be automatically shifted to 99. So when the share reaches 102, the stop loss will reach 100. So by this way you can preserve your capital. So even though if you are not getting profit in case if the share reverses from 102, but at least you will not be losing your amount once the share by chance if it reaches 98. So trailing stop loss is a kind of very useful tool. So it will take some time to adjust to this one, but once you are done, so you will see the importance of this. It's a very good tool. Okay, so next one. Next rule says don't add any positions to any trades. Uh, so generally people say like in the market you might be seeing the people saying that don't add any positions to generally they say losing trade, but they say that for a trade which is in profit you can add a position, but I am kind of contra to this one. So in our unconventional method, so when you are getting some profit out of any share, so um, if you are averaging it again, even a small downside move will wash out your profit what you had earlier. So in any kind of trades you are not supposed to have averaging, so whether it is a winning position or a losing position. Okay, so don't do that. But in a losing position for sure you should not average. But in case if you really want to go with a in a winning position, then you can, but still it is on your own risk. Okay, so the next one, very important rule, risk reward ratio. So probably I have already told about this in my earlier videos many times. So that the thing is, before entering any trade, you should always look about this risk reward, how much reward you are getting and how much risk you are taking for that trade. So the risk reward ratio should be always 1:1 at least. So it can be like a 1:2. I mean, when I say 1:2, one is risk and two is reward. So 1:3 or anything more than that is good, but at least it should be 1:1, not less than that. So what it says is that if you are risking 5 rupees, um, then you have to look for a profit of 5 rupees. Okay. The next rule is trading time, when to do a trading and when not. So trade time. So generally, as I tell to the people, you are not supposed to trade in between 9:15 to 9:45 or 10 o'clock, because there will be a too volatility in the market. So that's the reason why you should avoid that particular time. You should only start trading only after 9:45 or 10 o'clock in the morning. Okay. Yes. So after that, this is a very important rule which I like. I just thought of adding it because many people come to me saying that what to do with a particular share. So the rule is don't get personally attached towards a single share. So what people does is if any share gives them the profit for the first day, they every day they will just keep on targeting the same share, even though there is no movement in that, but still people in buying or selling that particular stock. So please avoid that. There are thousands of shares which are there in the market, and every day there will be hundreds of opportunities out of different shares. So just don't get stuck or personally attached towards a single share. Okay. The next important thing is whether you are buying or selling, always try to follow the trend. Don't go against it. So many times what happens is even though if the share is in a right direction, because of the trend it reverses. Because of the whether it is a negative or positive trend, the initial momentum of the share reverses. So it is always recommended to follow the trend. If the market is positive, then go with a buying a share, and if the market is negative, go for short selling. Don't go against it at any time. Okay. So the one very important. This is one of the my main learnings, and I'm telling people about this a number of times. The rule is that don't run behind forming a sure short strategy. There isn't one exists. So what this means is uh, people are always running behind forming a strategy which will be like 100% sure. So what they do generally is they will form a strategy, and they will work for like a 2 to 3 days, and it keeps on working, and the fourth day, as soon as it doesn't work, what the people say is that it doesn't work, so they will shift starting, they will start looking for a different strategy. So what it means is that there is no strategy which will work 100%. So what you have to do is you have to look for a strategy which work for around 70 to 80%, and you need to build up on it, meaning improvise that till you find that is a kind of good strategy which works even 80%. So 80% working strategy is a very good strategy. So you need to improvise on it, or you need to stick to that. Don't just run on behind strategies, follow trying to make it 100%. Guys, believe me, it is not possible. Totally it is not possible. There is no strategy as such which says it works hundreds of the times. Okay, the maximum it can go is 80 to 85%, not beyond that. Okay, so very important one, very important one. So just stick to one particular strategy, whatever you feel that it is working good. Just be stick to that and start improving on that. Okay. Okay, very important one. Don't watch too many YouTube videos, they misguide you. Yes, guys. So this is again in relation to that previous one, sure strategy, or it might be anything. So in order to just find out something good in the market, what people does is that they will kind of go through n number of YouTube channels, n number of YouTube videos, but almost 80% of them are like a kind of they are having no value in those. So it is so my suggestion is don't watch too many YouTube videos. So they are going to surely misguide you. Okay, and the very important one is the discipline. So if you don't have this, and if you are having everything, if you are doing everything right without this one, still I bet you are going to lose everything. So discipline is a very important thing. So what exactly is discipline? So it is nothing but your right entry time, and right strategy, right exit time, and it is having like a number of different parameters. So if the share is going against you, you should just come out with a stop loss, and if it is in your favor, you should go with a stake stop loss. So it is just a mixture of all the above rules or the above parameters. So You should always follow this. Without this, I will bet you for sure you won't be able to success in a long run. Okay, so discipline is a very very important tool. Again, I'm like repeating it. So without that, you won't be able to successful in a long run. Okay. Yeah, with that, I will just conclude my today's video. And again, I am asking apology for a very long gap between the videos, as I was quite busy with some other stuff. Okay, thank you. Then I will see you shortly in the next video. Thank you. See you. Bye bye.